Venture capital is very fundamental, right? If you really boil it down to its core essence, that's basically what the whole talk is going to be about. If we have time, we'll do a brief case. It's going to be a very brief case, but this will give you a complete understanding of what we do as investors, right? So basically, as the gentleman said here, I graduated from IIT Bombay. In IIT Bombay, I ran two of my own startups. One was a B2C, one was a B2B SaaS play. After that, joined investing, public market first, then went into venture capital. Been a great ride. Did my post-graduation from Ashoka. Worked at an incubator simultaneously. Joined a private equity fund. From the private equity fund, now I'm at Kae Capital. Been there for the last 2 years. Amazing journey. Like, I mean, to be very honest, I feel I was put on this earth to to be a VC. And fundamentally, VC actually, if in a line, to really summarize it for you, you are trying to find an Ola before it becomes an Ola. That's basically the whole game. So you are trying to find a very large unaddressed problem, right? You're trying to find a large unaddressed market, and then you're trying to use technology to solve it. That's fundamentally all it is, right? And there's a story that's very sort of close to my heart, why I like VC and where it sort of came from. So if you go back to 1960s, right? Mid 1960s. So you had this one gentleman who was basically the founder of the transistor, right? I think William Shockley. William Shockley, he had a couple of, which was like one of the first sort of value-based companies. 7 people left. They started Intel. 2 of them, one was Gordon Moore, the other one was Bob Noyce, right? Intel obviously started dominating little by little, and they hired this one sales guy, right? Very enthu guy in his early 30s. And he used to obviously go to and approach different businesses to buy their products, right? And one of the things that he noticed that all these small businesses, their promoters were basically tech people themselves, and they saw there was a lot of innovation happening, so they wanted to start pooling capital, right? They wanted to invest in different types of technologies and things like that. So he raised like a 1 million seed corpus maybe in the early 1970s, and that corpus basically is Sequoia Capital, right? And so this man, Don Valentine, basically that's his name. He died recently. I think he died in 2018, and he was alive. So basically, he invested in Atari in again 1970. That was like their first investment. After Atari, he invested in Apple. He invested in Steve Jobs when they basically had nothing, right? So he was alive to see Apple become Apple, Atari become Atari, EA become EA, Google become Google. He basically saw Google become like a work, right? So that's the thrill, right? I mean, you put in money somewhere, you make a bet on a market and on people, and then at the end of it, hopefully it pans out and then everyone uses your products to the market. This is the gold lending market. This is just all it is, right? People give their gold, and in exchange for gold, you can take some money. Now, typically the money will be used for something, right? It can be used for some emergency purpose. It can be used for healthcare loans. It can be used for edtech loans, whatever, right? Whatever you need, education loans and things like that. Now, what I do as a VC is just this. This loan is getting catered to by 2 types of players, right? So, demand and supply matching. And here you're going to have a supply, 55% is catered to by unorganized people, right? And then you have the remaining 45%, which is organized. Okay? Yeah. Unorganized would be what? Like a money lender, a pawnbroker, right? And in gold lending, you have some well-known players. So you can have someone like a Muthoot Finance, right? Muthoot is one, Manappuram is another. Now these guys completely cater to this market. Now if I were to think from absolute basics, if I have to build out a business, I need to get a market share. The only way I can get market share is if I'm fundamentally better than these guys and these guys. I don't know if you guys can see it actually, this is really tiny now. But fundamentally I have to beat both of them at something that matters for the consumer. Okay? Not just consumer, actually stakeholders. There are multiple stakeholders, everyone, right? Typically in a business there are multiple folks. You need to ensure that your value prop should solve for all the stakeholders, and it should solve for it in the best possible way. That's it. Poor service, okay? Okay, whatever. It can be anything. It can be a variety of things. The normal problem with any unorganized sector is primarily poor service, tough to get, all of that stuff. That's where these guys came in, right? Muthoot came in. So this, if you look at money lenders, pawn brokers, all of these guys, these were there maybe pre-2000s, right? Pre-2000s, these guys were there. Early 2000s, Muthoot came in. They started giving much lower interest rates. How? Because they started raising money from, say, bonds, things like that, whatever the instruments were there, and gave lower cost of funds, started opening branches, and it basically, whatever, they took some market share. So if you go back 20 years, this same pie would have been probably 80% unorganized and then 20% organized, right? And then 2000, this became 45%, this became 55%. Okay. Now today we are here. Now if today I have to start and look at a lending business which comes in here, who am I competing with? I'm competing with these guys, Muthoot and Manappuram. So I need to come in and give a product or a service or everything, whatever composes of a business model, that has to be 10x better. If it's not 10x better, it will not scale, they will eat you up and then your company will die. That's it. That's the rule, that's the only rule. Now I realize that these guys have very poor customer service. This is again, you research, you speak to people, you try getting a loan, all of that stuff. Poor customer service. What does that mean? So it means, again, grievance redressal is bad. So something similar, right? I think any legacy corporation, they just become lazy. So this is a big issue. Okay. Now I can very clearly see that there is some gap here. Okay. All I have to do is find a tech solution to plug for this gap. So venture capital is all about just matching a problem to a solution using tech. Now where does tech come in? What is the whole point of tech? Tech, so typically any business, right? I mean, again, legacy business is very like linear growth. That basically solves for product discovery, and then now I can start ordering it, right? So where a normal shop, right, some small shop would rely on people coming to my store and then buying stuff, and then maybe one day I got 10 people, tomorrow I got 7 people, so my sales would be like that. Suddenly I have a top of the funnel getting built by tech. Why? Because everyone has this app, maybe it's a dukaan or something, and therefore I get a growth here. So on a unit level, means per shop you are getting a linear growth, right? Where it was flat, you're getting linear growth. I genuinely don't know if you guys can see this, but you're getting linear growth now, okay? And suddenly you have 10 such shops or 100 such shops, and each shop, maybe every day is getting that linear growth. So cumulatively you get an exponential growth. This is what we're trying to get. We are trying to get these unfair sort of advantages using tech. Here I solve for it using mobile, here I solve for it using distribution, for example. That's fundamentally it. This is where tech will come in and solve. So in the case of gold lending, the only thing I can probably do here using tech is say poor customer service is what? Poor customer service, one of the things is Muthoot does not intimate you, you know what was your interest payment is due today. Because of which my penalties will keep racking up. If my penalties keep racking up, then my obviously cost of funds will I'll have to pay more, all that stuff. And because there aren't good alternatives in the market, I will keep coming back to Muthoot, right? This is where I can come in and say, okay, you know what, boss, I'll make a WhatsApp bot. I'll make a WhatsApp bot and I'll automate it such that every time your interest payment is due, I'll ping you and I'll keep pinging you. Simple solution like that. That actually works wonders. That actually reduced the cost of, what is it called, yield from 24%, one of our startups did, 24% to 18%. That's huge, right? That's all you have to do. That is the technology problem which was solved. This was a gap and a technology problem came in. And then we say, thesis, that this is such an important problem statement, say poor customer service is such an important problem statement that we can expect that in the next 6 or 7 years, we'll get maybe say whatever, 5% of this organized market share. This will become say 45 to 55%, and then in 5 years we'll get this. That's it. That's all we see is health card on their phones. Right now everyone has health card, Tata's come in. Just the thrill of seeing that impact, just the thrill of seeing like a middle India problem, so we're really excited. We can do this across multiple founders' journeys. Lot of stuff to learn. I think, and another startup, I'll give you an example, right? Zetwork. We came in when there were basically 3 guys with a laptop, IIT Madras 2018, right? B2B marketplace for manufacturing. Manufacturing in India huge. No one tried to solve for it. Lot of issues. 3.5 years, they're worth $3 billion. We came in at 4 million, and now it's 3 billion and 700 million in GMV, which is basically the value of product process, basically, you can say that. It's just the thrill of being a part of like founder stories.
Right, absolutely. Absolutely.
Yeah.
To the next question, what are the top 3 things that you look for in a company when you're deciding whether to invest or not? And what is the basic decision-making process?
Yeah, sure. So we did that basically here. Fundamentally, there has to be a problem. If there's no problem, then you're not. It's the very high likelihood that you won't scale. This is just not going to work. Um, it has to be a large problem. That's number 2. That's your total addressable market. That should be massive, right? And number 3 should be the team. We didn't speak about team because there's a lot on team that we debate. So in our investment memos, out of a 10-page document, like 3 pages are just on the people. How determined are they, right? What have they seen in the past which give them some maybe a chip on the shoulder, right? We actually like people who are extremely sort of not stubborn. You cannot be stubborn, but you have to be determined and you have to have that intellectual honesty to sort of pivot, right? Because things just won't work out. They're not going to work out. So basically problem, TAM, there's a market, and people. These are the 3 things. Business models will keep evolving. That you can't make a bet on.
Right.
Yeah.
From a personal point of view, what are the top 3 industries or sectors that you're looking forward to invest in, or industries that you think will be booming in the near future?
Yeah, so one very exciting space that I was looking at for the longest time was Web3. Web3, I've done a lot of work, we put out a lot of content as well. Web3 is something which I feel will pick up, if it's already started picking up, and it's going to continue. That's one. Second is SaaS, software as a service. Again, very interesting. Software as a service, the second. Third is fintech. Fintech is perpetually going on, and maybe fourth is I think there are more versions of commerce coming out, right? I think more versions of commerce 3.0, 4.0, these are 3 or 4 main ones.
Great. At what stage do you think a company should approach a venture capitalist to scale up their business?
You need to have, so there's this term we use called product market fit, okay? Product market fit basically means that there is some sort of a demand and you've gotten, no one's asking to get product market fit. People don't get product market fit even after a Series C when they're technically supposed to have gotten it, okay? But you need to have some initial indicators that the problem that you were going out to solve for, the customer that you were trying to solve it for is actually working out very well. That's it. That's the only fundamental thing that, if that initial indicators, then you don't need monetization. Somewhere you do, okay, somewhere you do, but you largely don't need monetization, but I need to see some initial indicator of PMF. And the team needs to be outstanding. Again, this is like, we can debate on team a lot. There are a lot of things we look for in team, but yeah, I think that's the right time.
Makes sense. So what is the deal breaker when it comes to investing in a company?
Or team. So if we don't have conviction on the team, we will not invest. The market might be fantastic, but we'll pass on if the team is not good. Team is number 1. A team is, I mean, when we're making the investment, yes, because we fundamentally have to back them, and we have to, it's marriage, right? You have to stay with them for like the next 7-8 years. So
Absolutely.
that's the main thing.
What do you think of the model of, say, a business like Cred? Would you invest in that?
I wouldn't invest in credit because I don't know what it does. Till now, I don't know what it does. It started out as a water platform, now they're doing prepaid cards, credit cards, I don't know. But I wouldn't invest in credit.
Yeah.
So investing, I don't know, I don't use credit, so I can't comment, but I probably wouldn't invest in credit from whatever little bit I know, which is like it doesn't have a play in my mind, in my limited experience. Yeah.
Be the possible things that a venture capitalist can help a firm with when they are part of the journey?
Lots of things. So, like, so for us, right, I can speak for us, this is more an internal thing, but there's a whole concept of 0 to 1 journey, right? 0 to 1 involves everything from getting your product in place, getting your customer in place, getting your channels in place, right? And hiring for all these things and building out the org structure. So we play a role in everything, right? I do hiring.
So right now NFTs and crypto is really booming right now. So do you think it is better to invest in crypto directly like Ethereum or Bitcoin, or do you think trading in NFTs is better?
If I'm fundamentally bullish on the NFT story, which I am, right now by the way we're in a down market for NFTs. And
yeah.
We're in a down market, but yes, fundamentally I am actually looking to back Rails. As an individual investor, I'll not go and buy a Bored Ape thing. I won't do that.
Yeah.
At least I won't do it. Again, everyone's different. But I am fundamentally looking to back as a fund infrastructure, core infrastructure. So for example, in NFTs, there's a very big piece on dynamic NFTs. There are some tools you will need to sort of deploy dynamic NFTs. I would back that because irrespective of market cycles, I know that if NFTs is used well, collectibles and games, Right?
Yeah.
If I'm betting on games, which I am, people love games, games will never die out. Therefore, I'm fundamentally betting on the whatever dynamic NFT enabler. That I would bet on, not like hardcore like an NFT. As an individual, I would not invest.
Okay.
So, what type of skills would we require right now as second year student to maybe work at a venture capital firm later on?
Maybe interning at a VC would help, and working at a startup would help. I think beyond that, it's very different. And working at a startup where the company has raised some money, so you know how the founders think, because then you will realize how VC works.
So basically, get both sides of the.
Yeah, ideally both sides, because then a good founder will know, अरे आप raise Series A from Sequoia, they will know ना कि मेरे को करना क्या है, and then you can understand how org building works, how product building works from there. That would be the best if you can pick up like a good team backed by a good fund and work with the CEO's office. That will give you a lot.
Thank you.